Hi, Harry Dent here. It's a quick update before I head out to Australia to do a PR and public speaking tour over there. Great country for people who've been there. Has the best demographic trends of all the wealthy countries in the world. Not as good as in the past couple decades, but the only country with positive demographic trends. And my message to them is demographics is not your problem. Your problem is expensive real estate, commodity resources with commodity prices in decline and likely to be for the next decade, and China is your biggest trading partner and the biggest factor in the whole kind of East Asia over there where they are, and China bubble's going to burst, as I've said in many newsletters and videos in the past. Finally, the U.S. stock market is starting to correct. I've been waiting on a correction here for a couple months. Usually it's nice to see a 5 to 10% correction before a top and then a final rally. And a lot of people are asking, is this the top? And you know, it is possible. Some of our best technical indicators have not signaled a top yet. Cycles are clearly looking toppy here. But even that's probably not that trustworthy, because with the Fed so pushing and manipulating the market, I mean, already we've seen that leading indicators are not leading anymore. They're coincident, they're useless. And that may be the same for technical indicators. But what's driving this is something we have been warning about for the last year. There is a vicious cycle where commodity prices are falling. The more commodity prices fall, that hurts the exports and especially the profitability of emerging countries' strongest export industries. And when that slows their economy, then that backs up on China, because China now, for the first time, exports more to emerging countries than they do to developed countries like North America and Europe. So China's exports decline, and then when China's exports decline, since they're the largest manufacturer of the world, huge importer of industrial and other commodities and energy and stuff, then commodity prices decline further. So you can see this kind of vicious cycle. Commodities, emerging markets, China, commodities, and it just gets worse. That's what's roiling the markets. Emerging countries are seeing trade deficits. They're running out of foreign exchange reserves, something Russell Napier warned in a presentation I saw back in March of 2013, when I really kind of got into this and started digging into it. So I think we're going to see more of that. You got to remember, in 2008, yeah, the world was poised for a crisis because of demographics peaking, especially in the United States, unprecedented debt ratios around the world, but it always takes a trigger, especially when governments are stimulating and trying to hold things together. So this is what I think is going to come out of left field this time. It was the subprime crisis, which again, focused in 4 states in the United States, triggered a whole worldwide crisis. This time, yes, of course, Europe could get weaker after getting a little better. A lot of things could go wrong in Spain and Greece. The United States, I think real estate recovery is going to sputter. So will the economic recovery on this kind of Fed cycle of stimulate and then it comes out. But I think the real wild card, the real left field factor, is going to be trouble in China. And again, I've gone out of my way in newsletters and my new book, The Demographic Cliff, and in past videos to just warn that China has the greatest bubble in modern history. Real estate infrastructure is overbuilding everything. There's already signs that some wealth management products and some loans over there are starting to default. The biggest sign I see, the richest people in China, and surveys show almost 50, 60% of them want to leave the country, and a lot of them are starting to leave. When the smart money starts to leave, and with the undue influence that the rich Chinese have on buying real estate, the top 10% probably own about 85% of the real estate, and they control 60% of consumer spending. If the rich slow down, if the rich stop buying real estate, if the rich start leaving the country, China is dead and this bubble will burst. It's going to burst anyway, but that's what to look for. And we'll see the stock market's at a very kind of important stage here. If it corrects up to 10%, it could still go to a new high. But if we see a break much below, like say 14,800 in the coming days or weeks, this market has topped from my point of view. And I'm going to cover that in the February forecast and the March boom and bust newsletter. So again, stay tuned. We are certainly near a top, and we may have already seen a top, and we're going to be monitoring the market patterns to tell people when to finally sell stocks and get out of the way, because the next crash is very, very likely to be bigger than the last one in 2008 and 9.